to discuss, for us today to discuss, deliberate, understand, and refresh our knowledge. Because the amendments keep on coming, we work on certain transaction, then we lose track on this. So I think this is a very good forum to refresh our knowledge on this topic today. I had the opportunity to work on issuance and listing of NCDs twice in my tenure during Crompton. I would try and add some practical aspects and my learnings on this topic during the course of this meeting. With this, I hand over to Ronak and Bala sir. Thank you.
Over to Sudhagar.
Thank you very much, Bala, and good morning, everyone. As Pragya has rightly mentioned, one of the modes of financing for any industry is issuing of debentures. In fact, especially for long-term borrowings, in companies we have two modes of borrowing. One is the short-term as well as the long-term. For long-term borrowing, always debentures are the suitable instrument for that. Without diluting the capital of the promoters in the initial phase, debentures is one way of augmenting the funds requirement for the company. At the same point of time, no doubt about it, interest is going to be a cost, but always as a finance person, as a prudent finance person, we know that interest cost is much lesser than the dividend cost. Because once you issue the equity, throughout the life you have to service the equity, which is not the case with the debentures. That is the reason we always say that debt equity should be in a proper proportion, and that debt should be more than the equity always. Because when you are doing the business, definitely you're going to generate the profits, and from the profits you can repay the debentures, which is not possible in case of equity. At the same point of time, there are various modes of issuing debentures like secured, unsecured, convertible, non-convertible. So depending upon what sort of depending upon the financial strategy, what you are going to adopt, that issue of debentures takes place. Sometimes it may so happen that you don't want to even pay much of an interest, and over a period of time, you want to dilute your capital. In such case, you can do partially convertible debentures or compulsorily convertible debentures. So there are several issues that where 0% interest and compulsorily convertible debentures. So there is absolutely no interest cost. The only thing is that in future, the dilution of the capital is going to take place, which the promoter is aware of and is prepared for that thing. So various modes of issue of debentures is there. It all completely depending upon what sort of strategy the CFO is going to adopt. But one big thing definitely is that, especially when you are going to issue list your debentures, that point of time, the companies should have a sound financial strength and a good credit rating, then only obvious people are going to invest in that. Now, question comes, is it mandatory for listing? Because obviously it is not. You can issue unlisted as well as listed debentures. Unlisted debentures also is quite famous but where you require small kind of funds, you can go for private placement. But when the requirement is a bigger chunk you require, better to go for public. So we will discuss all these nuances and what sort of instruments, how to issue and all those things over the presentation of Ronak. I give a pause here and request Bala to take over. Thank you.
Good morning to all of you. I have a great pleasure to welcoming you all for this session. As our earlier panelist and Sudhagar also said, this is an alternative method of raising the capital without increasing the equity base of the company. That is one thing. Once you raise the equity base of the company, lifelong, the company, unless until they reduce the capital, etc., they keep to servicing the equity. That is a great thing. But here, this is depending upon the requirement, how much you want to leverage, what is the short term, what is the long term, depending upon, you can actually plan it. And again, here, it is up to you to go for listing or not go for listing. That is also there. And one more thing is there, many times if you look at it, issuing of the debentures seems to be more of the tax advantages compared to the equity. Because what happens is whatever the interest is actually payable on the debenture, that is actually tax deductible as a business expenditure, which goes directly to the charge to the profit and loss account. Whereas in case of the equity, if we are rewarding to the shareholder by way of the dividend, as you know, it is actually what you call appropriation from the profit, because after the profit, then the dividend is actually declared, in which case it is not tax advantages to the people, and that is the issue here. So here again, the lawmakers have brought in various combinations. Debenture can be secured, unsecured debenture, again secured. It can be convertible, it can be optionally convertible, it can be compulsorily convertible. All those things are there. But nevertheless, there are a lot of regulations which are actually there. Although we talk borrowing the money seems to be simple, but that is not the case, because there are a lot of procedural issues which are actually involved in this. If we go into the detail, we can actually get into the detail. Although the section covering the debenture is only 2 sections, but the intricacies involved is very long. So that we'll have to understand very clearly, because ultimately we are all the compliance officer. We'll have to ensure the utmost compliances. Luckily, we have the Pragya who had a hand-on experience on handling the debenture issues, where she worked with the listed companies as well. And she has the advantage of sharing with her experiences, whatever the practical experience she has come across, especially as Dipti has put it, she handled much a crucial time at the COVID time of the issue. That's the greatest thing. Hats up to her. And Ronak has already prepared the various kinds of debentures. I think today what we'll do is we will not touch upon the LODR regulations, etc., because this is of the master class pertaining to the company's aspect. Leaving aside the practicality, which is actually coming up, Pragya will of course share with us. That is one thing. Second thing is, as usual, procedural issue. Many people will be aware of it. Although we'll be talking about the procedural issue, we will not be dwelling upon much on the procedural issue, but we will actually see on the conceptual issue the nitty-gritty which are actually involved. Because question may arise many a time. When do you create the debenture redemption reserve, whether investment is required or not required, what point of time it is required, when it is required, all these intricacies which are actually involved. There are, I think every time when we keep on reading the Companies Act, we get actually confused. What is right, what is wrong? Every time we try to evolve. That is what it is happening. Not only that, and the recent past, we have been also seeing there are more and more amendments and notification guidelines which are actually coming on. We'll have to keep updated ourselves. To that extent, today's webinar is going to be very useful and fruitful to us. As usual, on the chat box, whatever the questions are there, please do not raise any question regarding LODR pertaining it. You raise the questions only related to the Companies Act, which will be taking it. As Dipti puts it, at the end of the session, you can actually speak to us. We can actually talk. Until then, we'll be addressing through the chat box only. With this, I request Ronak to take over. Over to Ronak, your presentation, please.
Yeah.
Dipti, you should be happy. 121.
Yeah.
Yeah, warm welcome to all the panelists and the participants. I'm very thankful for this opportunity to throw some light on the provisions of the issue of debentures and redemption thereof as per Companies Act. So to start with, just introducing the debentures in a simple language. Sometimes when the company is in need of funds without diluting its equity stake, the company opts for debenture issue. So debenture is a debt. The nature of the debenture is that of a debt, and it's like a loan which needs to be repaid over a certain period of time based on the terms of its issue, and such securities also carry interest to it. Both corporations and government frequently issue such instruments for raising of funds. Now, as per Companies Act, the debenture is defined in Section 2, Subclause 30, wherein the debenture includes debenture stock, bonds, or any such other instruments of a company evidencing a debt, whether constituting a charge on the assets of the company or not. So be it secured, be it unsecured, the debentures are very well defined in Section 2, Subclause 30, and provided that if such instruments are referred in Chapter 3D of the RBI Act and such other instrument as may be prescribed by the central government in consultation with the RBI shall not be treated as debentures. Now, moving on to the types of the debentures. So we can bifurcate the debentures by 3 categories. on the basis, if issued on the basis of security, issued on the basis of tenure of the debentures, and issued on the basis of mode of redemption of the debentures. So to start with, if the debentures are issued on the basis of the security, it can be termed as a secured or unsecured. So as the name suggests, secured debentures refer to those debentures which wherein a charge is created on the assets of the company for the purpose of payment of in case of default. And a charge ranking pari passu with the first charge of the assets as referred to in Schedule 3 of the Companies Act 13, but excluding intangible assets of the company is created. And the secured debentures have a greater protection. In fact, they are fully protected as compared to the unsecured ones. Whereas unsecured debentures are those which are not secured by any charge on the assets of the company and are payable and attracts a higher interest rate as compared to the secured debentures. So these are, in a simple language, unsecured debentures are called naked debentures, which does not have any charge on the any of the assets of the company. Now, when issued on the basis
One
of
minute, Ronak, please go back to the previous slide. See, when we say that a charge ranking pari passu with the first charge, it means that already a charge has been created on the assets which are referred to in Schedule 3 of the Companies Act 2013 means the first charge is created on the assets which are shown in the balance sheet. Mostly these are all, most of the times it is fixed assets of the company on which the first charge is created. And when you have the concurrence of the first charge holders, you can always create a second charge on the same thing, which may be pari passu with the first charge, means both the charges are having equal rights. That is called as pari passu charge. So secured debentures can be first charge, second charge, third charge, which may be so. And if the first charge holder or the second charge holder agrees, the third charge holder also may get a pari passu charge because it all depends upon the terms and conditions based on which the lending is taking place or the debentures are being subscribed. Sometimes, if the first charge holder is not agreeing for a pari passu charge, then the second charge holder will be getting only a second charge. That means after discharging the first charge holders, whatever the dues are there, then the second charge holder turn will come. That is how it goes in the case of security debentures. Yeah, go ahead.
So
yeah.
yeah, the
So
charge creation of the first charge, second charge, third charge actually comes what happens is, as Sudhagar explained to it very nicely. If you have 100 crores of the asset, which is actually given as a security when you borrow the money, if you have borrowed the money only 40 crores, and whereas you have actually pledged a particular asset which is about 100 crores worth, that means you still have a scope of creating the charge to the tune of further 60 crores. In which case, suppose you want to draw another 20 crores or something like that, then you create a second charge so that you talk to the people. So long as the first charge holder knows it is 100 crores worth, the value is only 40 crore rupees, he will not have the objection of creating the equality of the charges, etc. But on the other hand, if the charge value is much lesser, he may not agree for the pari passu charges. He will say, sorry, I hold the first charge. After discharging my first charge, whatever the charge will be there. Much will depend upon what is the security available for getting the charge also matters in the particular case. That is the way it works actually. Yeah. Go ahead, Rohan.
yeah. So if debentures are bifurcated on the basis of the tenure of their issue, so they can be termed as redeemable debentures as well as irredeemable debentures. So redeemable debentures are those which are payable on the expiry, fully payable on the expiry of specific period as per the terms of issue, but the maximum period of the tenure is 10 years from the date of issue. And such can be repaid either in lump sum or in installments during the lifetime of the company based on the terms of the issue. Irredeemable debentures are those which are perpetual in nature because the company does not give any undertaking for repayment of money borrowed through issue of such debentures. And the debentures are repayable on winding up of the company or on the expiry of a long period. They can be legally framed as a bearer. And if debentures being categorized on the basis of the mode of redemption, so these are the debentures issued with the option to convert them into equity, a portion of such debentures, or fully. So it can be bifurcated as a partly convertible or fully convertible debentures. And if they are non-convertible debentures, non-convertible debentures do not have any option to convert into equity, and the same are fully redeemed at the expiry of the specified period. On the other way, if fully convertible debentures are issued, so as per section 71(1), any company may issue debentures with an option to convert into equity either fully or partly. However, in case of issue of debentures with an option to convert into shares, the same has to be approved by the special resolution at the general meeting. And partly convertible debentures, when issued, they have two portions attached to it, a portion which is convertible and a portion which is non-convertible. So convertible portion will be converted into equity shares, and the non-convertible portion will be redeemed at the expiry of the specified period of the, as per the terms of the issue. Yeah, my counterpart, CA Akshar Patel, will take us through the accounting treatment of of the partly and fully convertible debentures.
So, good morning, everyone. Myself, CA Akshar Patel, and I will be taking you through the accounting and taxation aspect throughout the presentation whenever it comes. So, as Ronak explained about the issue of debenture and some background of the debenture, I will be explaining you the accounting treatment of the debentures. So whenever the company issues a debenture, they are issued at a par or sometimes at a premium or sometimes at a discount. So there are different accounting treatment for all the different size of issues.
Please keep your mic mute, please. Some crosstalk is happening.
Yeah. So when the company issue a partly paid up debentures, so that time the only the issued the portion which is issued, that amount is only recorded in the books. For example, if the face value, if the debenture are issued at 1,000 rupees, but the called up value is only 500 rupees, so we have to record the transaction only for the 500 rupees, and the remaining amount will be called recorded as and when it is called up. So when the subsequent company calls the subsequent amount, that time it will be recorded, and there is no other treatment for the uncalled capital, uncalled debentures. And when the company issues a fully paid up debenture, that time the full amount is being recorded, and if it is on the premium, so the premium will be recorded in the securities premium account, and only the face value will be recorded under the long term liability in the balance sheet, and corresponding entry will be there in the bank. So it is same like the equity. When we record the equity, we credit the equity share capital account and the securities premium. So in the for the debenture also, we have to credit the debenture account, and it will be shown in the long term liability under the balance sheet, provided that debenture is redeemable after 1 year. Ronak, next slide. Yeah. So when we issue a debenture which is convertible, so debenture when it's a hybrid debenture, which is in which the part of the debenture contain the equity as well. So that time we record only the liability component of the debenture, and the balance component goes to equity. For example, if we issue a debenture, say worth 1 crore rupees, so and it is convertible debenture, so we have to discount the value of the debenture for example, it is a term of debenture is 5 years, so we'll discount the value of debenture with the prevailing market rate, and we'll record the that amount as a liability component under the balance sheet as per the Ind AS. For example, say we are raising a 1 crore rupees from the issue of debenture, and the rate of interest is say 8%. So we'll discount that 1 crore rupees and we'll bring that 1 crore to today's value. And that value will be the fair value which will be recorded in the books. And balance amount will be treated as a equity. So for example, that 1 crore, if we discount, that value comes to 80 lakh as on date. So the value of debenture would be a 80 lakh, and the equity component in that debenture is a 20 lakh. That's a residual value, that is after deducting the liability component. The liability component, because that balance amount we have to repay someday. So that is how it will be recorded for the convertible debentures. And if we have given the discount at the time of issue, that discount will get amortized over the period of time. uh, in case of Indian GAAP, it will be amortized over the period of 5 years, that as per the tenure of the debenture. And in case of the in NDS, it will be amortized by taking the effective interest rate method, and which will which will change every year based on the market condition and the interest rate prevailing in the market. Ronak, next slide. Yeah. And when we issue the debenture at a discount, so the discount value will not, it's discount value is a loss to a company, so it will directly will adjust it to the cost of capital, like cost of debenture. It will not hit the balance sheet. It will not hit the P&L directly. And when we redeem it at a premium, so premium becomes premium is like a financial cost to the company, and premium will be charged to the P&L directly, and the discount amount will get deducted from the value of the debentures when we issue. And it will be shown as a, like in the balance sheet as a, under the current under the liability, long term liability, and the discount value get deducted from that, and the balance amount will be shown as a debenture value. Next slide, Ronak.
Yeah, so looking at the governing framework for the issue of debentures, so the power to issue such debentures can be exercised on behalf of the company by the board of directors pursuant to the provisions of 179 subsection 3. And further, section 71 read with rule 18 of the company's share capital and debenture rules deals primarily with the provisions relating to the issue of debentures. So debentures are securities within the meaning of section 2 subsection 81. Hence, issue of such debentures, all the procedures for issuance of securities as mentioned in section 23 will be applicable, which states the ways available for the issue of debentures securities by the company. In case of non-convertible debentures, so section as per section 42 read with rules made thereof will be applicable, wherein the debentures are privately placed, and a public company can issue debentures either privately placed or by public issue. Secondly, in case of a convertible debentures, so the debentures which are convertible either fully or partly into equity, section 62 will be attracted by virtue of the explanation provided in the rule 13 of the company's capital and debenture rules, which explains that the meaning of the word shares or other securities to include fully convertible, partly convertible, or any securities which might be convertible into equity at the later date, and where the preferential offer for convertible debentures is made by the company whose shares or other securities are already listed on the recognized stock exchange, such preferential offer shall be made in accordance with the provisions of Companies Act as well as the regulations of the SEBI.
Here, as you said, in case the debentures are listed, they will be governed by SEBI issue and listing of non-convertible securities regulations. It is also possible that in case of some companies, their equity may not be listed, but they may get their NCDs listed. In this case, they will have to comply with certain formalities of the LODR. In certain times, unlisted debentures are considered little risky because of liquidity issues and maybe exit related difficulties, or if large amount is required. Now, we can see in the market also that there are certain companies whose equity is not listed, like Ashoka Leyland Finance, Your West Bengal state electricity distribution companies, their equity is not listed, but of course, debt is listed because it provides more liquidity.
Yeah. So when we are talking about the governing provisions, the main aspect to be looked at is the how the debentures are considered as per the deposit rules. So there are, as per Rule 2, Sub Rule 9 and 9A as displayed here, these two, if debentures issued within purview of these two rules, sub rules, deposit rules shall not be applicable. So just to say, mention that any amounts raised by issue of bonds or debentures secured by the first charge or ranking charge pari passu with the first charge of the assets on the as referred in Schedule 3 of the Act, excluding intangible assets of the company or bonds or debentures compulsory convertible into shares up to 10 years. And provided that if such bonds and if such bonds or debentures are secured by the charge of any assets referred to in Schedule 3, excluding intangible assets, the amount of such bonds or debentures shall not exceed the market value of such assets wherein the charge is created and assessed by the registered valuer. So if the issue of debentures is within the purview of this provision, the deposit rules shall not be applicable. And similarly, in the second case, where amount raised by issue of non-convertible debentures not constituting a charge on the assets of the company and listed on the recognized stock exchange as per guidelines of the SEBI. So deposit rules shall not be applicable in following two cases. Okay.
So as discussed previously, so accounting treatment for the issue of debentures initially would be uh, debenture will get credited to liability and corresponding entry will be go to the bank. When there is a discount on the issue of debenture, the discount will get deferred over the tenure of the debenture, and the net amount will be recorded in the books. And when it is on a premium, so when we premium is treated as a finance cost because it is as good as the interest amount that we are paying on the debenture. So premium will when we redeem the debentures at maybe at 5 years or 2 years as per the tenure, on in that financial year that premium will get impacted on the PNL and it will have a direct effect on the profit for that particular year. So from the investor's perspective, the cost of the debenture would be the investment cost. For example, 1 crore debenture we issued at a discount of say 10%. So the 90 lakh would be a cost which the investor will record, and as a company, the issuer will record 1 crore less 10 lakh as a debenture discount, and that discount will get amortized over the period of 5 years. So So the recording of the debenture, the treatment of recording the debenture is a different in Indian GAAP and as per the IndAS, because IndAS generally uh, put emphasis on the fair value of the debenture. So every year the debenture will get valued as per the prevailing market rate, or generally in practically, if we take the example, what they do is they take the bank FD rate for that particular year for all the 4 quarters. The auditors, when they do the audit, that time they consider the bank rate for that particular year for every quarter, and according to that they use that rate as an effective interest rate to discount the uh, to the value of the debenture. And even the amortization which they have considered, say like in our example, in 1 crores debenture was issued at 90 lakh, so the 10 lakh will not get amortized equally. The amount will differ on every year because they consider the effective interest rate for that particular year. And for convertible debenture, the NDS is very clear that we have to present the only the liability side of the liability factor into the financial and not the equity. So that is under the NDS, and Indian GAAP is uh, very simple. We have to record at the what price we are issuing, and discount will get equally amortized over the period of say 5 year 2 year. And if there is a convertible debenture, then there is no bifurcation required, till it get converted, like unlike India's. So main difference between India's in IGAP is the India's more emphasis on the fair value on every year and the effective discount rate, and the liability and equity portion should be very much clear when we disclose. Also, India's emphasis more on the disclosure portion, which the Indian gap do not say. Like when we have a debenture, we have to mention the terms of debenture, tenure, interest, what is a what how much portion is convertible, what are the fixed interest rate that we have to pay. So India's more put pressure on the disclosure than the Indian gap. So this is the major gap when we present the when we issue the debenture and the disclosure requirement as per the NDAs and the Indian gap. Ronak, next slide. Next slide, Ronak. It's done.
Yeah, it's there. There.
So when we issue the debenture, so in practical view, credit rating is not mandatory, but for a listed entity, the credit rating is mandatory because the public money is involved, and it is generally done by the credit rating agencies. Various agencies do the credit rating. The credit rating sometimes they do for the security, but mostly the credit rating is done for the issuer, the company. So on the basis of company's performance, the rating is given to their security what they have issued. And collateral disclosure is also required under the India's Indian gap both. When we issue the secured debenture, we have to clearly mention against what security this debenture are issued and who are the if there is other loan or somebody who already have another charge. So we have to also mention that is a ranking pari passu with say somebody, some other banks or some financial institution. So disclosure we need to give for the all the collateral, even though if we have a say the debentures are issued against some FD or say mutual fund. So we have to give the disclosure for the name of the mutual fund against which those debentures are issued. So accounting standard needs that level of disclosure in the financial statement. And debenture in when we pay the debentures are considered as a loan. So when we pay the interest to debenture holders, we have to deduct the TDS and deposit the TDS with the income tax department. When we have issued the debentures to a foreign entity, then the DD treaty between the countries should be considered before deducting the TDS. Otherwise, it will be TDS will be detected under section 195 of the Income Tax Act. And the same way that interest will be considered as an income for the investors, and they will show it into the PNL, and it will be the income for that company. So they have to pay normal tax on the incomes.
So as he mentioned that it is mandatory for public issue of debentures, and it is mandatory for listed debentures even though they are through private placement also. So in case of listed debentures, credit rating is mandatory for private as well as public debentures. So I'll just add that here.
Yeah, thank you, ma'am, for your inputs.
One issue comes is that when you have mentioned debentures can be issued at discount, debentures can be issued at premium, debentures can be issued at par. What is the reason for that? Why we issue the debentures at a discount? If we are issuing the debentures at a discount, how the interest will be paid on that? Similarly, when we issue the debentures at a premium, so all these are different types of instruments which are devised depending upon the what's called the strategy of the company while operating the funds. One way is that when you are issuing that just like discount means it is like a deep discount bonds. At the time of issue, the subscriber will pay lesser amount. Say, for example, if it is a 1,000 rupees debenture, you will pay only 900 rupees. And by the time the debentures will be redeemed, you will get 1,000 rupees. That is more or less called as, deep discount bonds. In fact, in the good olden days, the financial institutions used to issue these kind of bonds. When the longevity of those debentures were long, like 10 years, 15 years, something like that. In fact, if you see that section 186, which talks about that interest rate is to be always linked to the GSEC, it is about the tenor as well as it is to be linked to the government securities rate of interest. It should not be less than that. So subsequently, this question has come up in case of a deep discount bonds, how the interest rate is to be arrived at. So the ministry has given a clarification, and subsequently it has been made a part of the section also that in case of deep discount bonds, at the time of maturity, the total amount what you are getting, if that interest it is linked, it is more than the government securities rate, it is in compliance with section 186. Now the debentures which are issued at a premium, mostly these are all convertible debentures which are you are going to convert into securities of the company at a premium again. So the premium portion will be arrived at accordingly. And one more thing in the accounting aspect, I'm not very sure whether Akshar has covered it or not. One, there are two accounting aspects. One is that the issuing company, how they will account for, I think Akshar has very crystal clear, he has mentioned it. But when a company is subscribing to those debentures, suppose, say, for example, they are partly convertible or fully convertible, do I need to show it as investment or do I need to show it as a borrowing? If it is a fully convertible debentures, and according to Ind AS 24, if I am not wrong, we have to show it as an investment. If it is a partly convertible, that convertible portion is to be shown as investment, and the remaining portion, which is non-convertible in nature, it is to be shown as in the
in
loans
the
and
loans and
advances
advance
as if it
as
is
if it is.
a loan only. Okay.
Okay.
Yeah. Now
Yeah.
you can go.
Now you can go.
Sadam, please check. There is a echoing is coming, and please check that.
Yeah, so moving on to the main part, wherein look prerequisites to be taken care of before taking a decision on issue of debentures, the mandatory requirements to be taken care of prior to the issue of such debentures. First and foremost, to ensure that the articles of association do provide for such issue of debentures. If not, the amendment of articles of association shall be required. In second most important part, which is applicable in case of a public company, considering the proposed issue of debentures, the size of the proposed debentures and the existing borrowings do not cross the borrowing limits as mentioned in section 180 or any additional borrowing limits that company has already approved from the members. So considering the proposed issue and the existing borrowings to ensure that do not cross the limits that the company has already approved. In case if it's outside these limits, so such approval is mandatory at the time of issue. Secondly,
Sudhakar,
debentures. Yes,
Sudhakar,
yes.
Sudhakar, someone is asking you to explain once again the deep discount debentures.
In case of deep discount bonds, what I have mentioned is if the effective rate of the redemption of the debentures, so for example, as I told you, 1,000 rupees is the redemption value, whereas the subscription value is only 900 rupees, and the differential is 100 rupees. If that 100 rupees, you have to take it as an interest cost, and if that interest cost in the over a period of time, if it is more than the GSEC rate or equivalent to the GSEC rate as per section 186, then it is in compliance with. If it is lesser than that, then you are non-complying section 186. It is for the companies which are subscribing the debentures issued by other companies. This issue has come up. So whenever you are going for a deep discount bonds, please ensure that the interest rate is also in compliance with section 186. Yeah.
Thank you.
So yeah,
Yes,
any
go ahead.
debentures, yeah,
Yeah, go
any
ahead. Go
debent,
ahead.
yeah, any debentures that are being issued cannot have any voting rights. So debentures cannot be issued with the voting rights, and no issue of debentures, sorry, on issue of debentures, the company shall be creating a debenture redemption reserve out of the profits available for payment of dividend. And the company is also required to pay interest and redeem the debentures supposed to be issued in accordance with the terms of the issue. And in case, but more particularly in case of a secured debentures, creation of charge is mandatory, and a charge will be the issue will be secured by way of charge on the properties or the assets of the company, its subsidiaries, its holding company, or its associate companies, having a value which is sufficient for the due repayment of the amount of the debentures and interest thereon, and appointment of a debenture trustee, which will be covering in detail in the subsequent slides.
Yeah,
And
every
the
charge which is created is required to be registered. Somebody write the question. If the charge is to be registered with some government office, of course, the Pragya is already answered. Charge is required to be registered with the MCA. This is very clear because charge registration is required with the MCA by filing a CH1 or CH9, whatever the form which is there actually within the 30 days of the creation of the charges, that is required. If we don't create a charge, then that will constitute the default or non-compliance. So accordingly, they can take action against you. Yeah.
Yeah. Now, please go back to the previous slide for a moment. So you have mentioned here creation of a debenture redemption reserve, right? So DRR is exempted in certain cases, which you will be
Yes.
covering later on
Yes.
slides.
Yes.
Similarly, your appointment of debenture trustees, the appointment of debenture trustee is mandatory in case of listed companies and when debentures are offered to more than 500 people. We have to note that if debentures are offered to more than 500 people, then it will not be a private placement. It will become a public offer. And I understand that this point also you will be covering your later slides, right?
Yes. 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 Yeah.
Bala, for the benefit of the participant who asked this question, that MCA clarification which I have mentioned about section 186. I'm just reading out that particular portion. MCA by its general circular dated 9th April 2015 clarified that in cases where the effective yield, that is effective rate of return on tax-free bonds, this is also called as you can say deep discount bonds, is greater than the prevailing yield of 1 year, 3 year, or 5 year or 10-year government securities closest to the tenor of the loan, there is no violation of subsection 7 of section 186 of the Act. Okay.
Somebody put up a question, can debenture be issued on the right basis as companies issue the right shares?
Yes, debentures can be issued on rights basis in case if you see the Reliance in the good olden days of in the 80s, 90s, Reliance was mammoth in case of issue of rights debentures. Most of the times, the rights debentures always are advantageous for the convertible debentures, fully convertible or partly convertible debentures. If anyone is interested, please go through the shareholding pattern of Reliance Industries, which we publish in the annual report. How the issue of convertible debentures have been ultimately built up the share capital of the company, which was beneficial to the investors as well as to the company.
Somebody has actually put up in some exceptional cases, debenture holders have the voting rights. How can the debenture holders will have the voting rights?
No, debentures never have the voting rights. Only debentures, if at all they have that thing, only to the extent of their. Suppose, for example, if the debentures, they are not redeemed as per the terms of issue. So that point of time only that debenture, suppose debenture he cannot vote on any kind of AGM resolution or EGM resolution because a debenture holder has no right even to receive the annual report of the company.
Correct,
Forget
correct.
about voting. He
He
cannot
cannot
attend
attend
the
the
meetings.
AGM at all. He is not the invitee of the AGM at all.
The only thing what a debenture holder is having is right to inspect the financial statements of the company. He can go for inspection. He has a right for inspection, but he has no right to receive the annual report or attend the meetings and other things. Only thing is, in case of a default, in case of a redemption, that point of time, the debenture trustee is also there. If there is a debenture trustee, the trustee will take care of the things, not the debenture holders as such.
And also, sir, just to add here, in case if there is a variation proposed in the terms of trust deed,
Yes.
then they will have a say in the matters pertaining to the debenture related stuff, not otherwise.
Debenture holders will always have a say which is affecting their
Correct.
interest,
Correct.
but not in participation of the annual general meeting or extraordinary general meeting and voting. Because the question is the voting.
They're
The
not
vote, they will
actually.
not have the voting rights, but they will have the say if there are any interests is being affected. They will
Yes.
always agree which will be taken out through the debenture trustees and who will actually deal with it. Yeah.
In that case, they may hold a meeting, and in that meeting, they may have those voting rights, but not in
Correct.
case
Yeah, in the
meeting.
debenture holders meeting, yes, they will.
Correct.
Yeah. Yes, Ronak, go ahead.
So last mandatory part to be looked upon is the requirement in of redemption period, the tenure of the debenture. So an issue of secured debentures may be made provided the date of its redemption shall not exceed 10 years from the date of issue. However, Companies Act has provided certain exemption to this 10 years period, which can be more than 10 years, but not exceeding 30 years in case of following classes of the companies engaged in setting up of an infrastructure project, infrastructure finance companies that is defined in the non-banking financial non-deposit accepting or holding prudential norms issued by the Reserve Bank Directions 2007. Infrastructure debt fund non-banking financial companies as defined in Clause B, Direction 3 of Infrastructure Debt Fund Non-Banking Financial Companies, Reserve Bank Direction 2011. And lastly, companies permitted by the Ministry or the Department of the Central Government or by the Reserve Bank of India or by the National Housing Bank or by any other statutory authorities to issue such debentures for a period exceeding 10 years. These are the categories where debentures can be issued with a tenure exceeding 10 years but not exceeding 30 years. Now, touching upon the condition. Yes, sir.
That irredeemable debentures are prohibited. Like you cannot issue
Yes.
irredeemable debentures or perpetual debentures. You cannot issue now.
Right, sir. Right, sir. Yeah. So conditions for the issue of debentures, there are three main critical conditions.
Sudagar,
Yes, sir.
theoretically, at the end of the term, a company is unable to redeem its debentures. They have reached the expiry date, whatever the period, 10 years, 20 years, whatever it is. At the end of the term, they are unable to have because they don't have the cash. What will be this thing open to them to?
Technically, that rollover
Yeah.
is there only in case of deposits. The deposit holder, the company can go to the NCLT and can get the extended period.
Hmm.
To my knowledge, that kind of provision is not there in case of debenture holders. If it is a secured debenture, definitely debenture trustee, if the company is not in a position to redeem the debentures, the debenture trustee will step into that point of time. They can invoke the guarantees or securities, whatever they are there at their disposal, and take care of the redemption part. Suppose in case of an unsecured debentures case, so that point of time, obviously that whatever the debt due by the company, if it is not there, the unsecured debenture holders can approach the NCLT and they can also apply for voluntary winding up of the company, and all those remedies are available to them.
So which means only they have to approach the NCLT, then whatever the decision comes from the NCLT is only the possible.
Correct.
They cannot.
Alternately, the company may talk to the debenture trustee, and then if the debenture holders are agreeing, that point of time it may be, because only thing is, see, this is unlike deposits. This is debentures are governed by an instrument. There is a debenture certificate is there. Similarly, you have created a security and a lot of things are there. But with the concurrence of debenture holders as well as the debenture trustees, you may be able to issue fresh debentures, and this proceeds may be adjusted against that. It is not like that you cannot do it. You can do it, but it needs to be just, it is not a uniform practice. Templates are not there according to me. you need to devise a structure for that thing. See, for example, if the debenture holders and the company are in agreement, then what is the problem? It can be done. Okay.
Okay. Yeah.
Similarly, let me also take this opportunity to say that sometimes if the company is having funds, they might have issued 10-year debentures. The company can buy the debentures also from the market and they can cancel it. It is quite possible because there is no prohibition on the company to buy its own debentures. If they are listed in the market, or even if they are unlisted also, the company can go and buy the debentures when they have the funds so that they can reduce the interest cost, and those debentures they can cancel it. Or sometimes they can keep it alive for reissue purpose also. All these are, that debentures are a kind of an instrument for what's called as mobilization of funds. It can be utilized in various ways. Say, for example, sometimes what happens is you have created already a security on the debentures. Now you have purchased it. If you cancel that, again, when you are issuing, you have to create a fresh security. You have to again pay stamp duty, registration charges, and all those things. So for that particular purpose, there is a provision also that you can keep those debentures alive and you can reissue them also. That point of time, the same security will continue to be applicable to those debentures.
Can a secured debenture be issued for a period of less than 12 months by a company?
See, it is a hypothetical question that normally, for such lesser term, less than 12 months, debentures are never issued. So as I mentioned in the beginning itself, most of the times we issue debentures for the long-term funding, not for short-term funding. See,
Yeah, for
because whenever you are creating a security, you have to pay the stamp duty on the security. If it is there, and apart from that thing, you have to also ensure that registration charges wherever it is so. So for such a lesser short-term funding, the companies are not going to incur this kind of costs.
Ragya was telling something.
No, I agree with what Sir said. If the funds are required for shorter time period, companies generally go for other modes of raising debt, which may be through commercial paper, because commercial papers can be bought for a shorter period of time.
Okay, go ahead, Ronak.
Yeah.
See, in fact,
So
for the benefit of the participant, there are two types of fund requirements: long-term funding and short-term funding. So long-term funding, mostly it goes through the debentures. For short-term funding, as Pragya has mentioned, you have one way of doing is commercial paper. For that, eligibility conditions you have to comply with. Otherwise, you can go for deposits. Earlier, every company and any company, Tom, Dick, and Harry, could have accepted deposits. But even now, even for accepting the deposits, also 73 to 76, if I am not wrong, those sections, that company which is going to propose to accept the deposits is also to be a qualified company. It is also having certain criteria to act before accepting the deposits. And the third way of doing is intercorporate deposits are there. Short-term funding means you can go for intercorporate deposits. And finally, of course, banks are there anyway. They can give you overdraft facility. They can give you, working capital loans. All these things are there. These are all short-term funding. So the finance person always should be aware of what sort of fund requirement is there and suitable instrument is to be taken care. At the same point of time, the auditor of the company in the CARO reporting, they have to also mention that the long-term funds are not supposed to be utilized for short-term funding, and for short-term funding is not to be used for long-term requirements. This kind of shifting is also not to be done. And the chartered accountant, whoever is the auditor, they have to also ensure this, and they have to also make a report in the CARO reporting.
It's
Gagan, as you rightly say, this is actually a hypothetical question somebody has actually asked. That is the one thing. Second thing is, as you rightly say, in case of the short-term borrowing, in practice, many people go to the banks and they go either for the cash credit facility or they go for the overdraft facility, etc. and other thing and all. That's what they normally do. The debenture is done only for the long-term basis. That is there. Yeah. Yes, Ronak.
So the foremost condition for issue of debenture is debenture redemption reserve. will be covering a debenture trustee as well as the debenture trust deed. So to start with debenture redemption reserve. So as per section 71 subsection 4, that with rule 18 sub rule 7, which provides that the company shall create a debenture redemption reserve for the purpose of the redemption of the debentures, and the said reserve has to be created out of the profits of the company which are available for payment of dividend. The company shall comply with the requirements with regard to DRR and invest and deposit the redemption sum in respect of the debentures maturing during the year ending 31st March the next year. And the quantum of the DRR is as per the category of the companies, which varies as per the category of the companies. So no DRR for the debentures issued, be it public or privately placed, in case of all India financial institutions which are regulated by the Reserve Bank of India and the banking companies. Secondly, in case of a financial institutions as defined in Section 2, subclause 72 of the Companies Act, DRR shall be applicable only in case of a NBFC registered with RBI. Similarly, in case of a NBFCs registered with RBI under Section 45 IA of the RBI Act, and housing financial companies registered with national housing banks, if such categories of companies are listed, so no DRR is required, be it publicly placed or privately placed. And in case of such companies being unlisted, no DRR is required only in case of a privately placed debentures. And any other listed companies, in case of any other listed companies, no DRR is required for both publicly placed as well as privately placed. And in case of any other unlisted companies, adequacy of DRR shall be equal to 10% of the value of the outstanding debentures in value. So this is the quantum covering various categories of the companies for creation of a debenture redemption reserve. So mode of investment of or deposit of such amount. So every listed company, including listed NBFC as well as housing financial companies in case of a public issue of debentures, and other listed companies other than the unlisted NBFC in the Housing Financial Corporation, shall on or before 30th April in each year, in respect of the debentures issued by the such companies, is required to invest or deposit at least 15% of the amount of its debentures maturing during the year ending 31st day of March next year.
I'll just try to give an example here because I've handled this personally. So, like for 31st, like on 31st March 2025, debentures worth rupees 100 crores are maturing. So, by 30th April 2024, 15 crore worth of rupees should be invested in following which you have given methods, right? So, what we had done is we had invested 15% in the fixed deposits with the bank on 30th April 24 if they were maturing on 31st March 2025.
So as ma'am mentioned, so such category of companies may invest or deposit funds by the below mentioned methods as prescribed under the Act, which is deposit with the scheduled bank, in deposit in any unencumbered securities of the central methods of deposits, or any which are free from any charge on lien by the central or the state government, in unencumbered securities as mentioned in subclause A to D and EE of the Indian Trust Act, and similarly in unencumbered bonds issued by any other companies which is notified under subclause F of 20 of Indian Trust Act. So if these rules are covered, the 15% of the amount shall be deposited or invested in the following four methods as prescribed by the Act. Provided any amount remaining invested or deposited, as the case may be, shall not at any time fall below 15% of the amount of the debentures maturing during the year ending 31st March of the next year. And in case of a DRR for partly convertible debentures, the DRR shall be created in respect of the non-convertible portion of such partly convertible debentures and not for the convertible portion. Right. Now moving on to the next condition, which is appointment of debenture trustee. So a company cannot issue debentures to more than 500 people without appointing a debenture trustee, and whose sole duty would be to protect the interests of the debenture holders and to redress their grievances, if any. And the company shall appoint the trustee before the issue of prospectus or the letter of offer for subscription of such debentures, and not later than 60 days after the allotment of debentures, and also to execute a debenture trust deed to protect the interests of the debenture holders.
Yeah, as Ronak said, generally companies appoint before as debenture trustees anchor the offer process and the offer document from both issuer's angle as well as the lender's angle. And in case of listed entities, it is mandatory to mention the name of the debenture trustee in the offer document.
Somebody said here actually DRR exemption for IDFS. DRR is mandatory for all the companies, even if the company does not have the profit of the company.
DRR is to be created only out of the profits of the company. If there are no profits, you don't need to, you cannot create a DRR at all.
So in
As I
that
said,
case, will it be right for the company to issue debentures? I mean, will it be a non-compliance?
pardon?
Will it be a non-compliance on the
No,
part
no,
of
no,
the
no.
company?
It won't be a non-compliance. If you are having profits and you are not creating DRR, yes, it is a non-compliance. But
Mhm.
if you don't have profits and you could not create the DRR, it is not a non-compliance.
I was just thinking from that angle that DRR is mandatory in certain cases. If the company falls in that category, and if the DRR cannot be created in that case,
See, DRR is mandatory to be created out of profits of the company. If you see the
right, sir?
wording which is there in the section, it
Hmm.
should be created out of the profits of the company. So it is implied that when there is no profits, from where you will create DRR? It is
Okay,
a
right,
reserve to be created. When you are creating a reserve, what happens is you have to debit the profit and you have to credit the DRR.
right,
So when there is no profit, whom you will debit? There is no one.
right.
And let me also clarify that this DRR is only a book entry. You are creating that. But because the distributable profits will be reduced, what is the objective of creating a DRR? Creating a DRR is to ensure that some kind of the profits are retained by the company, so that which will be useful, that in future, whenever the redemption of the debentures comes, they will be having surplus fund. I mean, the sufficient amount of resources to redeem those debentures. Had this creation of DRR is not there, what will happen is the directors may get tempted to distribute that profits by way of dividends or whatever it is. So to control that, a TRR is to be created. And once
Right.
the debentures are redeemed, then this DRR has no purpose, and this DRR can be what's called shifted to the free reserves of the company.
Right.
So probably the credit rating has been actually brought in to see that companies are actually capable of repaying the money which is actually borrowed. The person who writes the question, the profit is not there. Maybe it happens as unforeseen circumstance or one particular year, it is okay. But otherwise, when the company goes for the borrowing, the whole purpose of getting the credit rating is to assess whether the company is in a position to repay the loan what they have taken it, isn't it?
Credit rating is always based on the past financial statements, not the future projections. Credit rating is never given based on the future projections. Credit rating is always given about the financial discipline of the company and the financial of the company, whatever they have. Financial policies, accounting standards, compliance, all these things credit rating agencies sees. But they cannot assure profits in the future years. So there may be a profit in the next year, there may not be a profit due to various reasons. There may be geopolitical conditions may change, weather conditions may change, anything may happen. So the answer to the question is whether the DRR is to be created when there are no profits in the company. You don't need to create it. You don't need to create the DRR from the previous year profits. Unlike dividend and all, you can pay the dividend from the previous year profits. You don't need to create a DRR from the previous year profits. Okay.
Yeah, the road, proceed.
Yeah. So, moving on to the next, for debenture trustee, a charge or a mortgage is to be created in the favor of a debenture trustee. So, this is applicable in case of a secured debentures only. And similarly, the security for the debentures by way of charge or mortgage shall be created on any specific movable property of the company or its holding company or its subsidiaries or associate company or otherwise, or any specific immovable property wherever situated or any interest thereon. However, in case of a NBFC, a charge or mortgage under subclause 1 above may be created on any movable property. Further, in case of a issue of debentures by the government company, which is fully secured by the guarantee given by the central or the state government or by both, the requirement of creation of a charge shall not apply. And also, in case of any loan taken by the subsidiary company from any bank or financial institution, the charge or the mortgage may also be created on the properties or the assets of the holding company. So this is a creation of a mortgage or a charge in favor of a debenture trustee where the debenture are secured and offered to more than 500 participants.
I'll just add here certain points of my own from my practical experience. While creating a charge or agreeing to create a charge on an immovable property, we have to be very careful because the land may be leased to state industrial development corporations. In that case, it may be very difficult, and these are generally leased on 99 years or more. So it may pose certain time related problems in getting the NOCs from them. They may not be so quick enough in allowing us time to create. So, and many a times they would want that the NOC that they give, it should be as per their format only. So we have to be very careful while drafting these things in our trust deed. And more so in case of listed entities, as per the latest amendments, the creation of charge is a condition precedent. That is, you have to create the charge first and then issue the offer document. So in that case, it becomes very pertinent. Further, if you're planning to create a charge on your holding company assets or your subsidiary company's assets, they would be in the name of those companies and not in your name. So we have to ensure that the requisite approval from their shareholders for creation of these charge or pledging or creating a lane should be in place.
As you rightly said, Pragya, that in case of leased assets, especially that 99-year lease and all, people think that it is the property of the company, which is not so. You have to
Yeah,
always see the lease documents, whether you have the right to what's called as secure that particular land or not.
yeah.
So again, of course, definitely the lender also will ensure these kind of things definitely. And at the same point of time, as you are rightly mentioning, I mean, any kind of sorry, when you are issuing the securities, if I'm not wrong, within 6 months of the issue, also you can ensure the creation of that security can happen. That
Right.
beyond 6 months, I think at this earlier that the registrar of company used to have some kind of a power to give that extension, which he is not having anymore. Beyond 6 months, now you cannot create a security. In case of debentures, they will become unsecured debentures.
Right. So
And
you
when they become unsecured debentures, God forbids if any companies or not the individuals or any trusts or HUF, they are subscribed to those debentures, you will definitely hit the deposit rules and that will lead to non-compliances.
right,
In
sir.
fact, it happened with us at one point of time when we went for adjudication that was not happening. The 6 months were fast approaching. We were having a lot of what's called as anxiety moments. Ultimately, we could achieve that. But after that, we made a rule that within the next 2 months, the registration has to take place, come what may. Otherwise, the things are to be escalated to the higher authorities.
Yes,
So
sir.
that
So
is what, in fact, one should be careful. Yeah.
So the same sort of scenario happened with us at the time of COVID, and there was traveling restrictions also. Some of our properties were in Himachal Pradesh, some were with Gujarat Industrial Development Corporation. So we had to face a lot of difficulty that time.
Correct.
And this rule of creating it, we had come just then. In case of listed debentures, so that was an issue we had to tackle with a lot of difficulty.
Yeah, yes, Ronak.
And especially where you have this English mortgage, one need to be very, very careful about that. English mortgage means, for the benefit of the participants, it is nothing but a registered mortgage. You have two types of security you can create it. One is by way of deposit of title dates, and second one is by way of registering the mortgage. In case of registering the mortgage, you have to go to the registrar's office or sub-registrar of assurances and get your charge, this security registered there. So that point of time, apart from the stamp duty, what you have to pay, you have to also pay the registration fee also. Even in case of a this thing, what's called as deposit of title deeds, that is more or less like a hypothecation of title deeds. That also you have to pay stamp duty. In some states, it depends upon the state law there, and some also want that particular registration also in the sub registrar's office. Some is actually it is not mandatory as such. Deposit of title deeds need not be registered in the sub registrar's office, as far as my knowledge goes about that.
Yes, sir.
Yeah. Yes, Ronak.
Yes, sir. Yes, sir. So the second step is identifying the debenture trustee. So the company shall appoint debenture trustee after obeying the following conditions. Firstly, the name of the trustee shall be stated in the letter of offer inviting the subscription of the debentures, and also in all the subsequent notices or any other such communications being sent to debenture holders. And before appointment of debenture trustee or trustees, in case of more than one trustee, a written consent shall be obtained from such debenture trustee who are being proposed to be appointed, and a statement to that effect shall appear in the letter of offer being issued for invitation for the subscription of the securities. And while identifying the person to be appointed as a trustee, the act is very much clear, which states the person shall not be holding any beneficiary shares in the company, shall not be the promoter, director, KMP, or any officer or employee of the company, or its holding, or its subsidiary or associate. Similarly, is not a beneficiary entitled to money which are to be paid by the company otherwise than as a remuneration payable to the trustee, and shall not be indebted to the company, its subsidiary, its holding, its associate, or a subsidiary of such holding company. Here, it goes beyond a layer which is being covered so far. It states or a subsidiary of such holding company. Secondly, the person shall not have furnished any guarantee in respect of the principal debts secured by the debentures or interest thereon, and shall not have any peculiar relationship with the company amounting to 2% or more of its gross turnover or total income, or 50 lakhs or such amount as may be prescribed, whichever is lower during the two preceding financial years and the current financial year, and is not a relative and shall not be a relative of any promoter or a person who is in employment of the company as a director or a KMP. So this is a very clear and a crisp conditions while identifying the debenture trustee. In case of a casual vacancy of a debenture trustee, the board has powers to fill such vacancy. Uh, and in the meantime, when there is such vacancy, the remaining debenture trustees, if any, shall act upon. However, where there is a such vacancy is caused due to resignation of the debenture trustee, the vacancy shall only be filled with the written consent of the majority of the debenture holders. And also, in case of any debenture trustee may be removed from the office before the expiry of the term if it is approved by the holders of not less than V4 in the value of debentures outstanding. at the meeting of the debenture holders. So it's not in number, it's more particularly referred in value of the outstanding debentures. So the duties of the debenture trustee, its primarily duties of the debenture trustee is to ensure the interest of the debentures by whatsoever event may be, more particularly to satisfy himself that the letter of offer does not contain any matter which is inconsistent with the terms of the issue or with the trust deed, shall satisfy himself that the covenants in the trust deeds are not prejudicial to the interest of the debenture holders, shall call for the periodic status of the performance reports of the company, and shall communicate promptly to the debenture holders in case of any default with regards to payment of interest or redemption of debentures, and shall take necessary action. Further, debenture trustee may appoint a nominee director on the board of the company in the event there are two consecutive defaults in the payments of the interest, or in case of a default in creation of a security, or in case of default in redemption of debentures. So in such scenarios, debenture trustee shall appoint a nominee director, then ensure that the company does not commit any breach of the terms of the issue of debentures or the covenants of the trust deed, and such necessary steps to be taken in case of any such event.
Can you just go back to the previous slide? Yeah. So on the point of this appointing a nominee director, the trustee and the company have to ensure that there is a provision in the articles of association for appointment of nominee director in case of default. You can proceed.
So, trustee shall ensure the implementation of the conditions regarding the creation of a security for the debentures as per the terms of the issue and as per the trust deed, and also to ensure that the debenture redemption reserve provisions are being complied with. Also to ensure that the assets of the company issuing debentures and of the same of guarantors, if any, are sufficient to discharge the interest and the principal amount at all times during the tenure, and that such assets are free from any encumbrances except those which are specifically agreed by the debenture holders. And the debenture trustee shall call for the utilization report for the funds raised by the such issue, and shall take necessary steps to convene the meeting of the debenture holders as and when the requirement arises, and shall ensure that the debentures are converted or redeemed in accordance with the terms of the issue, and perform such act as may be necessary for the protection of the interests of the debenture holders. Where at any time the trustee comes to a conclusion that the assets of the company are insufficient or are likely to become insufficient to discharge the principal amount, as and when it falls due, the debenture trustee may file a petition with the tribunal, that is NCLT, and tribunal by order may impose such restrictions on incurring any further liabilities by the company as considered necessary in the interest of the debenture holders. Similarly, as mentioned, the meeting of the debenture holders may be called upon by the debenture trustee in an event where a requisition in writing signed by the debenture holders holding at least 1/10 in value of the debentures for the time being outstanding, as in to say, a requisition has been given by the 1/10 in value of the debenture holders. The meeting may be called, and also on happening of any event which constitutes a breach, default, or which, in the opinion of the debenture trustee, affects the interest of the debenture holders, a meeting of debenture holders may be called upon. Yeah. So, the last condition is for a debenture trust deed. So basically, debenture trust deed is a written statement legally conveying property to a trustee, often for the purpose of securing a loan or a mortgage. It is a document creating and setting out the terms of the trust. It will usually contain the names of the trustee, the identity of the beneficiaries, and the nature of the trust property, as well as the powers and the duties of the trustee. It constitutes trustees charged with the duty of looking after the rights and the interests of the debenture holders. A trust deed in Form SH12 shall be executed by the company issuing debentures in favor of the debenture trustee within 3 months from the closure of the issue. And the same trust deed for securing any issue of debentures shall be open for inspection to any member or debenture holder of the company in the same manner to the same extent on payment of the same fees as if it were for the register of members of the company.
Can I add something here from my
Yeah,
Yes.
please. Yeah, please.
So as Ronak also mentioned, the trust deed has to be in form number SH12 only, because first time when we tried to issue debentures in 2016, that time the format that was picked up earlier by us was not as per SH12. It was a normal format. So we realized it has to comply with actually and be as per the format of SH12. Second is, when we draft the trust deed, we have to be very careful about certain clauses in the trust deed, which are your arbitration clause, your place of raising dispute, and also event of default. Because at the time of COVID, we issued debentures in my earlier organization at the peak time of COVID. So when you talk about force majeure clauses, it will cover your fire, flood, earthquake, but a condition like COVID was not covered at that time. So we deliberated a lot with the lawyers, lenders, and then with their advice, we inserted pandemic also. So nowadays, pandemic is also being covered. So we have to ensure that our event of default clause should be an enabling clause from the company's angle. We should try to cover the maximum events which will not classify as event of default. And so as Sudhakar sir was also mentioning that there is a provision for earlier redemption of debentures also, so which may be a put or call option. So if we want to do that, it can be drafted in the trust deed document, which we did in at the time of COVID in our trust deed. So it's better to draft it at that time, because I'm not very sure later on how it can be, whether you go to the debenture holders for amendment in that. And you have to also take care of the stamp duty aspect also, and somebody has actually asked that question also. So trust deed will also invoke provisions of stamp duty, which is generally, as far as I remember, it's some 0.05% of the debenture value, which is a huge amount. And in case of listed debentures, if your trust deed is not executed within time, there is a penal interest which is 2% over and above the coupon rate till the date of execution of trust deed. So these are some of the points which should be kept in mind while drafting a trust deed.
So, as per Rule 18.9, there are exemptions being provided from the applicability of the entire rules of the entire Rule 18 of share capital and debentures rules, wherein such categories are exempted from any provisions of the Rule 18. So, on any amount received by the company against the issue of commercial paper or any similar instrument issued in accordance with the guidelines of regulations or notification issued by the RBI, or in case of any offer of FCCB or foreign currency bonds issued in accordance with the foreign currency convertible bond ordinary shares through depository receipt mechanism scheme or regulations or direction issued by the RBI. And the provisions of these rules shall not apply unless otherwise provided in such scheme, regulations, or directions. And similarly, in case of instrument for rupee rupee denominated bonds issued exclusively to overseas investors in terms of APDIR series circular number 17 dated September 29, 2015 of the RBI. Further, there are partial exemptions given where the debenture are issued for public offer, wherein subclause Sub-rule 2 to sub-rule 5, that is to say, appointment of trustee, meeting of debenture holders by the trustee, and debenture trust deed shall not be applicable to the public offer of the debentures. Now, moving on to the next, after ascertaining the mandatory requirements and the conditions are fulfilled, the procedure for the issue of debentures shall be first and foremost in case of convertible debentures to obtain a valuation report from the registered valuer, and the same shall not be applicable in case of a non-convertible debentures because there is no dilution of share capital of the company. And as such, valuation of securities and justification of price are not applicable. Subsequent to that, call for a board meeting in accordance with the secretarial standards after giving sufficient notices to the board of directors with the notice and agenda covering the following items to consider and approve the issue of debentures, including terms and conditions of such issue, to identify the group of persons to whom the debentures are being proposed to be issued, to identify the trustee and to obtain the consent, and to fix day, date, time for the general meeting, and to approve the draft notice of the general meeting. Subsequent to that, after working out on the approvals received, the board, subsequent meeting be convened, wherein the approval of the offer letter is to be taken in form pass 4 to after obtaining the written consent to appoint the debenture trustee and to authorize director for dispatch of such offer letter and to maintain the complete records of the person to whom the offer is being sent.
I'll just add here, Ronak, on the previous slide. So the first meeting, which you mentioned under point number 2, yeah, you will need that because it's issue of debentures that cannot be done, cannot be delegated. However, the meeting under point 3, it can be delegated to a committee of debentures for administrative convenience. You can maybe delegate it to 3 directors instead of calling a full board meeting.
Right. So, moving on to the next procedure, in case of a public company, a copy of board resolution for issue of such debentures shall be filed with the ROC within 30 days in form MGT 14. And after on the due date to convene and hold the extraordinary general meeting to consider and approve the following items. The first and foremost, if applicable, as we mentioned earlier, if we are above the proposed issue is above limits already prescribed under section 180, so to pass the special resolution for increasing such limits, and secondly for issue of debentures. And such special resolutions to be filed with the ROC along with the explanatory statements thereto within 30 days. Subsequent to that, to open this will be the internal procedure. As ma'am mentioned, it might be delegated to the committees also. So to open a separate bank account in a scheduled bank for keeping for deposit of the debenture application money. Secondly, prepare the list of such person to whom the offers are to be circulated, and to ensure that the offer letter shall be accompanied by the application form serially numbered and addressed specifically to the person to whom the offer is being made, and to ensure the dispatch of offer letter to the identified person. So this will be the internal procedure to be started with immediately after convening the general meeting. And the director authorized has to maintain a complete record of the person to whom the offer letter is being sent in form prescribed form 5. After circulation of offer letter, the company to receive the share application money and to ensure that such money is only received through check, demand draft, or any other banking channel, but not by cash. On the closure of offer and on receipt of all the share application money, a board meeting to be convened, and to ensure that such meeting is called within period of 60 days from the receipt of the subscription money, and to transact the following businesses at this meeting. Firstly, to consider the allotment of the debentures. Secondly, to approve draft agreement for charge creation and authorizing the director for signing such agreements and the deeds wherever applicable. And in the similar line, to file Form CHG9 within 30 days from the creation of the charge.
Add-
Then, yes, ma'am. Yes.
Yeah. No, I think you complete, then I will.
Yeah.
Yeah.
So, subsequent items should be approval of the draft of the debenture trust deed wherever applicable, and authorizing directors or the authorized person for ISIN generation in case of a demat securities. In case of a physical securities, authorizing, I mean, to finalize the debenture certificates and authorize directors and authorized person to issue the same. And to ensure the return of allotment is filed in form PS3. Yeah.
Yeah, now I will just add here. So we all are either working in companies or are practicing CS, and we know the main intent of the management is to raise the money and utilize it at the earliest. And PAS 3 is generally allowed to be filed within 30 days, but in this case it is 15 days. So what generally, practically, we should be an enabler manage towards the management. So the steps that are followed is basically receive money, allot securities the earliest, file pass 3 so that our management can utilize money. So we need not wait for 60 days or 15 days. And also, as you mentioned, a separate bank account is to be there. So we need not open a separate bank account. If there is already a bank account of the company which is not being used for any other purpose, the company can use the same account also.
Yeah. So lastly, post allotment, the necessary entries has to be made in the register of debenture holders in a prescribed form, that is form MGT2, within 7 days of the board meeting where the allotment has been approved, and also to make the necessary entries in the register of charge in CHG7 if applicable. And issue of debenture certificates or credit of shares as the case may be. The due date as per the act is within 6 months, but generally it is done on the immediate basis. Yeah. So lastly, touching upon the provisions for the redemption of debentures, that debenture redemption reserve is used for the purpose of the redemption of the debentures. Section 71, subsection 7 lists out the procedure to be followed while redeeming the debentures. The DRR is to be accumulated from the profits gained by the company which is available for dividend. And for the purpose of partly converted debentures, the DRR must be created in respect of non-convertible portion only, as already discussed. And the DRR may not be issued for any other purpose other than the redemption of debentures. Now, in case of any default by a company on repayment of debenture amount, or any or all of the debenture holders or debenture trustee may seek remedy from the for the same before the NCLT, and where a company fails to redeem the debentures on their maturity or fail to pay the interest on the debentures when it's due, the tribunal may direct the company to redeem the debentures forthwith by its order on payment of principal and interest due thereon. So in case of any default, the debenture holders as well as the trustee has rights to approach the NCLT in case of any default.
Further, if company defaults in payment of interest or redemption or creation of securities as per terms of the offer or issue document, then if any dividend is to be declared by that company, they will require consent of the trustee also. Yeah.
That's it.
One aspect I would like to take up, I think it is not, I mean, we have discussed exhaustively, is that though we said secured debentures are exempted deposits, but unsecured deposits are not exempted deposits, right? So question is that can I issue unsecured unsecured debentures or not? Unsecured debentures are deposits. Now, how to go about it? Can I issue unsecured debentures without affecting the deposit rules? Because secured debentures are exempted, provided that also the creation of the security value should not be less than the market value of security should not be less than the debenture value. Then only they are exempted. Now, if I issue unsecured debentures, what will happen?
The deposit rules have to be complied with. I mean, they can, but
So the
it affects the deposit
only
rules.
advantage there is that whenever you are issuing unsecured debentures, you may ensure that if it is listing, of course, then it is a different thing. If they are unsecured debentures which are not listed, then what you need to do is please ensure that those debentures are issued only to the corporates. Because
Yes.
any amount in any manner, if you receive it from a company, from another company,
Right.
those are also exempted from the deposits. So we can take a call on that if the unsecured debentures are subscribed by another company, then those unsecured debentures are not triggering the deposit rules. Now the question comes whenever you are making a private placement of unsecured unlisted debentures, how you will take the precaution that suppose if an individual or a HUF, a partnership firm, they subscribe to those debentures, what will happen? Because only company to company they are exempt are not other than the companies. So what you have to do is you have to write very clearly in the offer document that individuals, HUFs, partnership, other than the corporates, they are not eligible to subscribe these debentures. That offer you have to also put it. So we can say that, look, these debentures are not offered to the other than the corporate category. So that precaution one has to take care, otherwise there will be a problem. Then another question come up. So suppose I have made the private placement of unsecured debentures to the corporates. Now subsequently, those debentures have changed hands from the companies to some individuals. Then what will happen? Am I triggering the deposit rules? Answer is no, because these things are applicable only at the time of issue of debentures, not after that. After that, that may go into an individual's hands also, there is no issue. But at the time of issue, they cannot be issued to the individuals. Okay. Yes, Bala, any questions?
Yeah, I'm going through it because I think most of the questions we answered, even some of the questions Pragya has directly replied also. But somebody
Ronak,
raised,
stop sharing. Ronak, stop sharing the screen. Yeah.
somebody raised the issue of the stamp duty. What is the applicability of the stamp duty? Stamp duty being a state subject, it will vary according to the state because it is governed by that state. In which state you are situated, accordingly you have to go by the stamp duty, isn't it?
Correct.
There will be two stamp duties. One will be on the trust deed and one will be on the debenture certificate. Yeah.
Any restriction of the amount of the preference of the profit for DRR?
What is the question?
Any restriction on the amount or preference on the profit for creating DRR?
What restriction? If you have profit, you are under obligation to create DRR.
No, that is the thing. Any ceiling is there or any
No,
percentage
there
is
is no,
specified or
no,
something?
there is no ceiling. Only thing what it says is by that during the tenure of the debentures, at least 50% of the debenture value is to be created in the shape of DRR. That is the requirement.
There is a comment, actually, even I had a doubt. Debenture is a central subject, central list, not
Yes,
state list.
yes. Yeah,
And
yeah.
participant, we are very careful. They have mentioned it is central. It's not
The
state.
No, you
stamp
see
duty,
that
yes.
there are different stamp duties are there. One is, as Pragya has mentioned, about debenture trust date. Second thing is, when you are creating the charge, there is a register stamp duty element is there. When you are depositing the title deed, there is a stamp duty element is there. So different stamp duties are there for, so we cannot have, suppose for example, when I'm creating a hypothecation of title dates, that time it is a state subject, it is not a
For
central subject.
charge, it will be state subject,
No,
depending on.
charge is
But
the
as
state
regards
subject. Yeah, charge
debenture
is the,
certificate will be, and again the trust date depending on the volume and all. Yeah, please go ahead, Mr. Bala.
please help me understand applicability of the optionally convertible debenture applicable for an unlisted private company, and what are the compliances to be complied by such companies?
I think we discussed.
The procedure is the same,
Yeah.
whether it is optionally convertible
Yeah.
or fully convertible. The procedure is the same. Section 42 you have to comply with. Okay, in case of if it is a fully, I mean, if it is a suppose even if it is a partly convertible, it falls under that section 62 1C also. You need to have the shareholders' approval because you are issuing some security, some shares, in future when they are partially getting converted. So procedure is the same, more or less.
It is practically seen that for the issue of the secured debenture to even one investor or a handful of investors, debenture trust is created. Why so?
It is
I had given an answer. As per my understanding, I would want us to pitch in first. In case of listed debentures, it is mandatory. Second, even if unlisted debentures, the lenders may want somebody who's a third party, maybe, who will safeguard their interests. Probably that is also an angle why a trustee comes into picture, because it gives the lenders a comfort.
I agree with you, Pragya. I agree with you.
Is valuation is mandatory at the time of the issue of the CD, as we can take the valuation at the time of the conversion also, right?
Conversion.
Both ways, it works both ways. When you are issuing at that time itself, you can determine the conversion price, or alternately, you can do it before the conversion.
Yeah.
Is
It
it
depends
mandatory
upon
to,
issue terms.
is it mandatory to have the shareholders approval for the issue of the debenture? The amount for well within the borrowing limit of the company, and the articles have enabled the provision regarding issue of the debenture. Yeah, if it is within the borrowing limit, no shareholders approval is required actually, because it is already there. It is within the power of the board. If you are exceeding the borrowing limit, then you have to go to the shareholders. I think even the slide also said that.
Unless they are convertible. If they are not non-convertible debentures, yes. If they are convertible, whether partially or fully, you have to go to the shareholders.
Yeah, under section 62.
Master Direction of the Reserve Bank of India, commercial paper and non-convertible debenture of the original of initial maturity up to 1 year direction 2024. If a company issues NCD in accordance with these directions, then debenture rule need not be complied with. Is the understanding is correct?
Mr. Bala, repeat it, I think.
yeah.
Slowly repeat.
Yeah. Reserve Bank of India, commercial paper and non-convertible debenture of original or initial maturity up to 1 year direction 2024 issued by the RBI Master Circular. If a company issues NCD in accordance with these directions, then debenture rules need not be complied. Is it understanding is correct?
See, if
It's
it is
correct.
an NBFC company, then only it is regulated by the Reserve Bank of India. Because whenever there are sectoral regulations are there, they supersede the regulations of Companies Act. If it is an NBFC company, the answer is yes.
Okay. I think other question Pragya has answered. Can you please repeat, if the unsecured debentures here are issued to firm, what are the precautions to be taken care?
You have to comply with deposit rules. whatever that deposit section as well as the rules, whatever the compliances are there, they have to comply with that.
Can debenture be redeemed before the maturity date? I think Sudhakar has answered
Yes.
this. If the company
Yes.
has the extra cash surplus, they can do it. That I think he has answered already. Yeah, that is all I think. Questions. Now 1 minute, let me see. Yeah, that's all I done with. So
There is one more question.
one more question has come. Okay. Is unsecured obsolete convertible debenture considered as exempted deposits?
See the deposit rules.
Is unsecured obsolete convertible debenture considered as exempted deposit?
I think if we need to check if panelists, then we will revert it later on with the auction.
Okay, then we can open up for asking questions. If any participants would like to seek answer, they can raise their hands. Anyone has got any question? Please raise your hands.
I think no one is there. Our participant and one of the partner has mentioned that the exemption mention only convertible, cumulative convertible debentures.
Compulsory convertible.
Compulsorily convertible.
Compulsory,
Compulsorily convertible debenture.
Yeah.
Only unsecured convertible compulsory debenture less than 10 years is exempted deposits.
Okay.
That's what he has
Answer
mentioned.
is
Yeah,
yeah.
answer is there. Yeah.
So
I
no
don't-
raising of hands.
No raising
we
of
can-
hands is there. That is, I think there's one more question has come.
Stamp
What is the
duty,
stamp duty
secured
for the secured NCD?
As per
Yeah, you see optionally
state.
convertible.
I was on mute.
Can we issue unlisted CP? Is there any
Yes,
circular has come for every
debentures are there.
non-convertible securities?
It is debentures, please.
Yeah.
I think we can close now.
Yeah,
We
I
have
think so.
answered all the questions.
Yeah.
Okay. Yeah, Pragya has answered. Thanks. So we can close now. We have seen. Okay, everyone is telling thank you. Thanks a lot
Thank you.
for everyone participation and active part. Everyone is also answering each other on chat box. Thanks a lot for all that contribution. Thanks, Pragna, for your lot of practical outputs like leasehold land and also take in advance that NOC and all that issues. And for your comment not to create debenture redemption reserve if there is no profit and it is not non-compliance, the participant is very happy because he's happy that will be complied. So it was a lot of interaction with a very ticklish issue. Thanks a lot, Rona, for a wonderful presentation, and Akshay specifically because participants were very happy. His explanation was very good and showing his experience. Mr. Bala for moderating, and Sudhakar, your expert comment as well. All the participants, thanks a lot for your participation. Let's meet next week with another topic. Thanks, Pragna, again for your all inputs and time.
There will be a lot of appreciation on the chat box. The credit goes really to Pragya and Sudhakar, and the excellent presentation by the Ronak. He has actually captured everything in a very capsule form, putting it in the appropriate headings, etc., explaining nicely. Good job done. Thanks a lot, Pragya, for sharing your valuable experience. Many thanks.
Pleasure, I would say. Refresh the knowledge. Thank you.
Thanks, dear.
Have a good weekend. With this, we close the session and we yet meet in the next week once again. Thank you.
Please note, next week, our one webinar, we are crossing 150. We are reaching that.